see, in a place like Bangalore or Calcutta or Mumbai, wherever. And regarding my trading journey, so I do have an undue advantage, as Nilesh mentioned, that since I am from IT, so it was an obvious shift from manual to automation because I am kind of technically aligned. So I started my trading journey back in 2018, and that's the point. You try to realize, oh, you have less money, you have to earn more. Simple as that. That's the only first reason that you try to get into something new is like you need to upskill, you need to bring something new, and you always want to build something of your own to help the family and all, right? So back in 2018, I remember the only the most common trading system was Zerodha. Like everybody kind of jumped, into Zerodha. They started with discount brokerage, and we all started manual. That was my first exposure to trading. And I can now look back and say that I knew more about the system rather than the trading strategies, stocks, options, futures. So those came later. And back in 2018, like there was no AI, so you basically have to build everything from scratch with your hand. And I, as a part of my IT journey, I am an automation engineer basically. So since I'm an automation engineer, I am always kind of a lazy person, and I try to figure out how can I automate things so that I can just sit back and relax. That's my first and foremost important thing, and that's the reason I came to automation. That is my first point. Now, getting into the part with trading, I remember I just shared this with you guys. Like my first strategy was what everybody thinks: get inside the market quickly, take some profits, and get out of the market. That's I believe everybody's first principle when it comes to trading. When you're learning new, I was a complete beginner. I don't have a finance background. I didn't know anything about trading. I learned options, I think, from looking at some YouTube videos. And very first 5 6 days, I tried to do it manually, and I got this beginner tutorial. You can say that when I'm losing money, I tend to stick to the losing trade for a long period of time, and when I'm winning, I'm just, oh, 500 mil gaya, 1000 mil gaya, just get out of the market. Okay, that was the first thing. And I saw, I think in the first 1 month or 2 months, I got to know that I was just losing money. And I figured this out quick. I mean, that was a blessing to me that I did not lose too much money before I realized this, that I had to get it automated. And at that point of time, I understood that I was working. So it was not possible for me to look at the screen every day and look at the charts and which script was going up or going down. I did not have the patience, and I did not have the, like, simply enough the time to do so, because I was in a regular full-time job. So I had to do that as well. So that was the point of time I realized it has to be automated. And at that point of time, Zerodha was the only broker who used to provide the broker APIs. I remember Kite Connect. I think still they call it Kite Connect. And you have to subscribe to APIs. You had to pay around 2,000 rupees to get those APIs, and then you could trade. So I actually built this system started back in 2018, and basically the system has remained, I would say, more or less same. It's with just more and more technological advances to make it more optimized. That has been my automation journey, and slowly I realized I have actually switched from Zerodha to multiple other brokers like Angel and IIFL. I have few other clients to handle as well. So those things came, you can say, slowly and steadily. And now currently I am I have built a system like which can actually handle multiple accounts simultaneously in the same market, and I just sit back and supervise. Okay, so that's the quick introduction, like how I got to the automation part. All right. So next point, I think let's start with the Nilesh. Should we go with the pros and cons? Okay.
Yeah, we can cover first, Sudeep, who is ideally the right person to start thinking about trading automation, because every trader is at a different stage in their trading journey in terms of their proficiency as well as in terms of their experience. So it is very important, while you shared rightly that in your very few months of your trading journey, when you started realizing that trading manually is something that you cannot do with the kind of time and the patience involved and the energy involved, right? So maybe a quick understanding of what is the right time for a person who is into trading, who is into markets, to start even thinking about trading automation. That is number one. And number two is, when we have when as an individual trader, when we start thinking about moving towards automation, what are the first few things that we should keep in mind in terms of the risks associated to it, the pros and cons of both the sides in terms of moving away from manual trading and then venturing into automated systems, and then maybe post that we can start looking into your system and you can give us a breakdown of the entire architecture.
Sure. Okay. So first of all, I would like to say, ask yourself what kind of a trader you are. So first of all, you have to be a systems trader. Like in our line of work, what we say is we can automate only the things which are repetitive. So basically, it will happen in a specific pattern, and you are going to expect some things to happen in a specific manner, and it has to be repetitive. There is no yeah, there are algorithms which are basically machine learning based and AI based, but those will get to later. I mean, that's a little bit of advanced topic for this particular forum. So coming to normal automated systems. So first of all, you need to have a system. Now, what do I mean by system? So if you're a trader who thinks in a discretionary manner, just to give an example, let's say there is a news breaking out that what is happening between in the Middle East. So you think, okay, the market is going to fall. So as soon as Monday morning comes, you will buy puts. Just to give an example, I believe everybody over here at least have a basic idea about option and futures and what we are talking about, the scripts. So basically, you are shorting the market, right? And you short the market, then after a certain period of time, you feel, no, the market has bottomed out, the indexes are normalizing, and you feel, I want to stress on the point that you feel the market is going to go up. You actually change your stance to being long. You will buy calls, or you can buy a future, so on and so forth. So if you're this kind of a trader, you are basically a discretionary trader. So you are just manually observing the market. You are getting some feel about the market by seeing the charts, looking at the open interest, or looking at the whatever indicators you want to look. And then based on that, you are taking a trade. So if you're in this category of the trader, you are still in a discretionary phase. When you want to switch to a system means you have a specific entry point, it will have a specific exit point, you will have specific targets to monitor, and then you will enter a trade only when your all the check boxes for that particular trade ticks, and then you're going to exit when when that criteria is fulfilled. That's basically what we call a system, and it has to be repetitive. So let's say if you build a system, like let's say which will trigger maybe only once in a month, I think that will be a little bit of an overkill. You don't need that. I mean, you can have some other system just to give you some trigger. Most of the brokers have some kind of like passive means to trigger signal, like GTT, or I think there are some other names as well. So if you're in that phase, you don't need to automate, simply because right now automating incur costs. It is not free anymore. Even if the broker APIs are free, say for example, a smart API, which is done the Angel one, which I actually have my infrastructure built on. Then you have IIFL, you have a lot of the broker APIs are free, but the infrastructure to run them are not free. So I will get to that when I actually show you my system. I'll get to know. So automation will incur cost, and don't forget, like if you're automating, that means you will be ordering like a number of times in an intraday window, or at least even 2-3 days of windows. So the order multiplication will be there. And as and when you order, the brokers are very happy because they are going to have money on their own side. So that is also something you need to keep in mind. Now, next thing is why you should automate. So there are pros and cons of both the sides. When you should automate, when you want to completely block out your emotions from your trade. And I'm sure every one of like us over here have felt this one, like at least some point in their life, that emotions are ruining your trade. You will see, like when you are in a bad trade, you tend to pray, like you trying to speculate that the market is going to turn around, and then it doesn't. You just go deeper and deeper into a loss. And when it turns around, when you are going to actually cut your target short and you're going to get out of the market as quickly as possible. This has happened with every one of us. We have faces big losses. At least I know, just because you were sticking there manually. So first of all, you have to be a system trader. You need to have a particular strategy. You need to have a particular entry, exit, and monitoring criteria for your trades. Then you have multiple accounts. It's quite possible that you might be handling few accounts, let's say your friends and family or whatever. So, and you have lot many accounts to handle together. And imagine at that point of time, market is crashing or market is running. It is undergoing through a very rapid change. You have to take actions very quickly. And when it comes to taking actions quickly, our brain is simply not that efficient. You will miss trades. You will take false trade. There are fat finger mistakes which do happen. You are going to miss your spreads. Well, let's say for one account you entered the spread in a profitable manner, but in the other spread, by the time you actually took the trade, the spread was gone. You entered in a lost exposure or in a bad moment of the spread. So these things happen. So if you're that kind of person who has multiple accounts, definitely you should automate. Otherwise, it is very inefficient way to handle. And finally, people who actually work, I would say that is a kind of a controversial topic because automation is built for people. I actually built that because I felt that I wasn't giving enough time to the screens. I had to go to work. But I come to realize even if you fully automate your trading system, you should not leave them unsupervised. I'll get to that point soon. Like, why am I telling you this? Even if you have a foolproof system which is working perfectly, you have worked on it for like 2 3 years, that there has been no issues. Still, you should not leave your trading systems unsupervised. You should have the final control in your hand that if something is going out of the way, you can actually pause, like give an emergency stop to all your trading. Those systems should be there. So I think I have mentioned like what are the pros and cons of automation. So Nilesh, is it okay to show the
Yes.
system now?
Yes, let's get into your system architecture now. And meanwhile, people, if they have any questions, feel free to keep dropping it in the chat. We will be picking it up right from there. Let's move to the system design and everything now.
Okay, so let me quickly share my screen. So let me know if you're able to see my screen.
Yes, we are. I'll also pin this for everyone.
Okay, so it's a bit of So, okay, so I believe people over here have a fair idea about what is a cloud-based system, what is a local system. If not, in simple words, if I'm mentioning local, that means it is your personal system. It's your laptop or your desktop, whatever, that's your local. And if I'm talking about a cloud, that means it's something like basically a virtual machine or a server, which is running in the cloud. So basically, there are a lot of cloud systems out there, which is AWS, GCP, Azure, whatever. So I simply choose AWS, but there's no hard and fast rule that you have to use a specific system. So coming to our system, so I'll be showing today like a simple straddle based strategy, which is a very common. That's why I chose this because most of the people would be aware of what is a straddle, and there are systems, multiple system available in the market to show how to automate them as well. So I'm just giving you
Sudip,
like a
maybe we
simple.
can just take 1 minute and just a quick explanation about what a straddle is, because maybe in some of the audiences they
Okay,
might not be aware of.
okay. So okay, let me. Okay, so let me quickly show. Let's say I am in Nifty. This is an option chain. Let if I'm seeing Nifty. So a straddle is basically it can be a short straddle or a long straddle. So a very common strategy which is used by like a lot of traders even nowadays is called a short straddle. Okay. So basically what you do is you sell a call and a put simultaneously. It will look right. Why is it over here? Just give
Yeah,
me
you can
one
just cross
second.
this. Yeah, just hover there and
I am
cross.
not able to.
Just cross. It will.
Not able.
The meeting will still run. Yeah.
Oh, okay, fine, fine. So yeah, not okay. Okay, that's not a problem. So let me go to analyze an option share. So basically, you buy, you sell one put, you sell one call. I think okay, sorry, my bad. I haven't logged in. That's why it is not allowing me. Okay, so I've now logged in. So basically, if okay, now it is coming. So this is basically a strat. You sell one call, you sell one put. It's a highly risky strategy. You cannot leave this. I would never suggest to leave this strategy in a positional trade, like carry it overnight. This is an intraday strategy. As you can see, max loss is unlimited. So if the market crashes after you have entered, it's a catastrophical problem. But still, it's a very common strategy that most of like a lot of traders will use, because this is a highly lucrative strategy as well. So let's say I am implementing this straddle. I have to put clear entry points, when the trade should enter and when the trade should exit, how to mitigate your losses, and so on and so forth. This is the straddle. So I have this strategy enabled over here. This is my basically the starting point of my system. So first, what I do is I run a script over here. As you can see, this launch ringmaster. So I won't get into that. I have already run this. It takes some time. What it does is it will create two instances of VMs basically in the cloud. As you can see, these are the two instances running in the cloud for now. So it's like basically having a virtual system running in your cloud. And when you actually have this enabled, you will have something like this. You can actually enter a different system, and you have multiple. I just wanted to show multiple brokers. So this is based in IIFL. As you can see, it mentioned IIFL at the end. And this is basically running on Angel. So I'll just quickly give a small overview what this strategy does, and like how this is implemented. I have paint over it. So once you have a strat, it looks like this. The PNL graph, as if you see over here, it looks like this. So what it does is if the market, after you enter this, first of all, it will enter at a specific time. This is a 9:20 straddle. So at 9:20 every day, it will enter the market. As soon as the time hits 9:20, I will enter this particular trade. As and when I enter this trade, I am going to monitor the market, and depending on the movement of the market, I will try to cut one of the legs when the other one becomes profitable, and so on. Like it's vice versa. This is how the strategy works. So I'm not going to get into the strategy too much, but let's jump into the technology. So you will have something like this, and this is completely automated, by the way. So after you run it, it looks something like this. So just give it some time. It has now logged in. I will run it, and it is saying that there's a JSON file. I'll get to that. What exactly is that? Okay. So just remember the screen. I'll explain what exactly is this. So basically, this is the strategy what it is running. You guys can see my screen, right? This black screen is visible, correct?
Yeah.
Okay. So I'll just briefly understand. If you can see the screen, what it means is I am first of all running in a test mode, because obviously today is Sunday, the markets are not open, so these are not real trades. Secondly, this is it is running on Nifty, and as you can see, the second pair, it shows data unavailable because BSE doesn't provide you live data on non-market, like in non-market hours. So data is unavailable, and I wanted to show you this because if you think that you can backtest or you can check your systems with all the exchanges, that is not always correct. NSE will give you the data, but BSE will not. So once you get into the nitty-gritties of this of our trading journey, you'll get to know all these small details. So you have to test it with NSE data, and then basically I am now pointing towards at the ATM, that is at the money options. So market is currently at 22819. It is pointing toward the synthetic future, and this is the straddle for particular this day. Now, how is it running? So this is how I am running this. If you can see, every broker will have something called broker APIs. This is like, I'm just to give you an example. This is Angel One's smart API. This is one of the broker APIs. This is free, completely free. This is why I kind of like Angel, because its historical data and its real market data is also free. You can get to know the structures over here. Is there anybody who doesn't know what the API is? Should I explain that also, Nilesh? Just to give you an example, like say APIs are basically, it's like phone calls to one system to the other. Okay, in a coded format. These are JSON codes. So these are ways how systems communicate with each other. So when I enter over here, let's say this is also working completely based on API. Brokers are giving you APIs to fetch market data. Think in one way that this is one of the ways, this is like a key by which you can actually access market data in real time during the market hours. So you can go through these, the API codes over here. All the API codes are posted over here. This is how it looks like. And once you have it coded in Python, you can have examples as well. But right now, you can even go to ChatGPT, feed this link, and you can actually ask ChatGPT to build an API calls for me to get, let's say, create a GTT, or how do I punch in an order. So those things are also possible. So once you have this all APIs, you will build a code which will look something like this. Let me show you a little bit of the example code as well. So it looks like this. If I show you my code, let's say, I'm sorry. So the code actually looks like this. I won't get into the code too much, but this is how the code looks basically. Okay. So you have to define some functions. So we'll get to the code part maybe later. Okay. So these are the APIs. You can use these APIs to actually build a complete algorithmic system from scratch, which can do everything. So if I go back to our system over here, it can actually it is basically streaming the data. So let me explain a little in a visual manner. So basically, first of all, we have something called as APIs. These are basically just data. So we have a broker who is going to provide a lot of APIs. You can read these APIs and you can get the market data. Let's say I want to know where is the current market, like where is the current market now. So you can see Nifty is currently standing at 22819. Depending on that, you can actually fetch what is the at the money option for at this particular point of time. So 22900C, I am looking at 28th April's expiry. And based on that, I can actually check my margin, whether I have enough margin to actually do the trades. And if I have, you see it is clear, that means margin is available. And then you can actually fire those trades. So once the trade has entered, this is basically showing you the MTM as well. Like if I would have entered the trade, it is going to show me what is my current PNL mark to market currently going on. This is not streaming, so that's why this screen is not moving. If the market was open, you would see this data is changing rapidly, and the MTM is also varying rapidly. And let's say I have a target that if the premiums for one of them has reached a certain target, let's say 25% or 30%, it is going to exit as well. So once it exits, you are going to have something like here. Let me just give you a view. So this is how each algorithmic and each client is running on basically these three structures. You will have an Excel file. I follow this structure. I have an Excel file. I have the main execution as an executable file so that it can run on any system without any Python dependencies. And you have a launcher file. These are the three main files to actually run the system. And you have, so this is like a configuration system where one of the tab you will have some of the secrets data like the API key, username, and the PIN. You will have some of your configurations over here. Currently, I'm just checking the Nifty 28th April. So you'll have some data, and you will see I have marked it as test, not a live. That's why it is performing test runs. And over here, you are going to see the orders. And as you can see, these are all live orders. So this was like last I have run it on March 23rd. These are all live orders. This is the real, what PNL you can see, these are all real PNL. And this is just to keep a track, like, how when I'm trading, what instrument I'm trading, when the entry happened, when the exit happened. So you will see this has a long history. Basically, it is running back from October, I think November, I think. Yeah. So this basically how it looks like. And once you're running it, it looks like this. And also, let me show you something. I have an inbuilt Telegram. I have built it for my own, convenience. I have built a Telegram bot also to support this. Let me see if you can see this. Is my screen? Can you see this, Nilesh? Is it visible properly?
Yeah, a bit of it.
A bit of it, right? So you can see what happens is when an order is triggered in my by my system, you will see the trades entering over here. Which instrument actually entered, which instrument exited, at what profit or loss you have booked it. So those things are also visible. This is just my system, which I have built it for myself. This is optional. You can build this, you cannot build this, but that's up to you. This is just for my own system. So this is the flow of my system.
All right.
And when the yeah.
So the one thing, it was for this example, maybe we started with, let's say, one short straddle as the strategy to follow. Maybe can you, and this is also one of the questions Nikhil has asked in chat, do you put your strategies in the code? So maybe we can take a -1 step where, let's say, we can talk about a strategy which does not exist. Let's say you have curated, you have thought of by combining certain indicators or, certain metrics in your mind. And let's say you wanted to build an automated system on top of that. Right. So, for example,
How will I do it?
let's say as simple as, let's say, a golden crossover happening on a particular instrument or a particular stock, then how do we go about doing that? Because here, let's say starting with a straddle, and identification of that straddle is based on where the Nifty closure is there, or what was the end price, right? So it's very easy for the starting point is easy in terms of identification.
Yeah,
but maybe any other strategy, how does the signal generation work, and how does that translate into an order trigger? And where does that fit into the code of the entire architecture is something that would be very interesting to talk about.
Okay. So see, currently I don't have that in my system over here right now, but I'll explain. How would I go about it? Okay, I have, let's say, let's we get to paints. I am very bad at this paint, so sorry for this. Okay, so I'll explain thematically what will be my approach. First of all, like you will have to like when you are using the broker API, let's say you want to first scan your market. Let's say I want to only scan. If I can show you the system, yeah. Okay, so over here, I'm just like creating a strategy just as an example. Let's say I want to see that if the volatility of a particular system has changed. Will that work, Nilesh, or I have to show you in a script-based system?
No,
like let's say this works, right? Okay. So let's say, for example, I am seeing in the market today whether the volatility of a system has spiked or not. So basically, let's say TCS had a bad fall, or let's say happened on Thursday, and I am sitting over here on Thursday night. I want to analyze the market, and I want to see which scripts fall into my category. Now, my strategies, like let's say a very simple strategy. I want to see whether a volatility of a system has spiked significantly so that the premiums are currently overpriced. That's one of the a very common strategy for traders to do. Okay, so what will I do? My system now needs to find which of these scripts has fallen the most in the last trading session. That would be my first approach. So basically, what you can do is you can use the broker APIs to give an historical search. So let's say over here you have a system called historical API. Okay. And my stock universe that I'm currently thinking about for this particular strategy is Nifty 50. So I'll have, first of all, in this one Excel, let's say I have this Excel, this is the config file, this is the usual part. Say, in this particular scenario, at least I need to have the tokens, or at least the symbol names for the Nifty 50 stocks. Okay, that is what you have to do, because it's not a very intelligent system. You have to tell the system what it needs to be done. So you're going to list out the Nifty 50 stocks over here, and then I'm going to have something called the spot token. Now, what are tokens? Tokens over here means that the broker APIs can identify which exact contract you're going to trade via something called a spot token. This is something as you can see, can you see this JSON data? Every broker will provide this token data in forms of a JSON payload, which is a very big file. As you can see, this is the 41 MB JSON file. This has basically all the active contracts currently being traded in BSE and NSE combined. So that is this JSON file. And from this JSON file, I have to look for that particular token. So that I have to code it in Python, that go through this particular symbol names, look for their particular spot token. And then, like, once I have identified the 50 scripts, I mean, the system has identified the 50 script, it is going to fetch the historical data for last 3 days. Just as give you an example, you can change it, that's not the problem. For the last 3 days, I want to have a list of the LTPs for 1 minute windows, 1 minute candles for the last 3 days. I have to fetch that using this historical API data. This one, as you can see, like 1 minute candles are available over here. When I have had this data, you are going to figure out that on Thursday morning, which stock has changed the most, or at least Friday close, which stocks have the most amount of deviation from the last 3 days data, or even the last close. So obviously you're going to get a list of, let's say, TCS will have, let's say it has dropped around 50 points. So that is standing on the top of your list. This is how you figure out the stock that you intend to actually target. So now I have reached the second phase where I have picked out TCS is the correct spot. Now what it is going to check? Now I want to check the first near months, like let's say for my near months ATM, I want to check that the IV has jumped or not. I'm going to check this IVP, implied volatility percentile. Okay. So this is basically, it is telling me that whether my jump in IV is significantly high or not. And yes, you have to calculate the IV by yourself. This data is not provided by the broker. Broker is not going to give you IV. You can fetch it from the broker, but I don't trust all the data. I calculate my implied volatility by myself. Once you have the implied volatility, you are going to check for 30th March, the implied volatility is, let's say, 25.4. For the next expiry, let's say for I'm taking FNO stocks, so you have to check the monthly option. Let's say for 28th April, I can see the implied volatility is 27.9. If the difference is high enough, maybe I want to do a calendar spread, a simple calendar. So it looks something like this. Let's say TCS. This is March. I want to sell one of the ATM options put, and let's say on 28th April, I want to buy. It will look something like this. Now I know the structure. If I know the structure, this is the first step. First, you are identifying which stocks to trade. As per my system, my strategy is simple. I want to see whether the implied volatility of the front month has jumped significantly enough than the next months. If their jump is significant, I want to do a calendar trade on that particular stock. So first what I did, I searched for all the Nifty 50, like all the 50 stocks in the Nifty 50 stock universe. In that stock universe, I checked whose jump was most significant. That was step 2. I found out that TCS had the most jump, theoretically. Then you have to figure out what is the ATM options over there. So like, for example, as you can see over here, I was selecting that, okay, Nifty was at 22,800 something. So basically, depending on that, I can say 22,800 call and put are the ATM options for that particular expiry. Similarly for TCS, you're going to figure out for March, what is the ATM option? For April, what is the ATM option? Now I have the exact scripts that I need to trade. Once I have those trades, I have to use this particular API, orders. You just need to fill up the specific orders. Let's say what kind of order you need to paste, whether it's a normal order, whether it's a buy order or a sell order, whether it's a market order or a limit order. This is a very important point. I'll let you know the difference because now SEBI has mandated some changes. What kind of product it has. So based on this, you can actually throw the order, and the broker system is going to reply you with something like this. It looks like It look exactly like this. This is the place order request. Once the order has been placed, you are going to get a response like this, whether it is successful or not. So let's say my order actually went through, the order was executed correctly, the message will be success and it will come back within order ID. And then I'm going to monitor it. I'm going to monitor those orders and I'm going to check whether it is fulfilling my systems or not. I believe the main phase of the system. And regarding the exit, I'm going to monitor, let's say if I reach plus 1000 MTM, I'm going to exit. A simple 1-to-1 target to stop loss ratio. If it reaches minus 1000 as my MTM, it is going to exit. So as soon as your MTM crosses 1000, it is going to throw the opposite orders when you entered buy and sell, and you're going to get out of the trade, and it is going to be logged in your order log, like just like this over here. As you can see, like for example, exit, entry, exit, entry. Like that, you can actually enter and exit and log it over here. Was that clear enough? I was, or am I going too fast? So please let me know if I'm going too fast. I can slow down and I can change my pace. So that
No, I
was
think
that was
most
a
of it is clear. We will just let people also take a moment and ask any question if
sure.
they have up until now. I also have a specific question, Sudip. I think from a
Sure.
structural point of view and approach point of view, things make sense. There is one key thing to keep in mind is that how do we, prepare for risks, which is essentially that,
Yes. Yes.
if let's say tomorrow there is a 500 gap down happening, or let's say 800 points gap down happening, some of the
Right.
positions which we have, and let's say somebody might be following a system where there are some overnight trades, or some of the carry forward trades in their system. So while somebody has reached that stage where they have automated bunch of their strategies using broking APIs and done all of these that we were talking about, but still there is an inherent risk of things changing overnight, and these days the market is extremely volatile, we know, because of the external
Yes.
macro
Yes.
factors, right? So how does
Right.
one gear up and prepare for those like emergency situations, exigencies, and prepare themselves in terms of that okay, my system should protect me?
Right. Like this is a very important point, and this is something which I would really want to stress. So the first point is, as I said before, even if you have made a completely automated system and you have tested it, it is running fine. It is a very bad idea to leave your trades unsupervised. I have personally faced this myself. You have margin, and just to give you a real life example, back I think the day when Trump had mentioned that the I am going to wind up this war, right? And the market moved sharply. What happened was I can see that I have met my target. My trade was giving a target profit. It should have exited. Suddenly, the order was, I mean, a order was triggered. I can see it has entered my system, but for some reason, order was not executed. No reason. And trust me, this will happen more than often. I mean, and especially when markets are really going crazy, what happens is the background of this problem is that brokers have their own risk management systems, RMSs. So what these RMSs is doing is they are basically trying to get the margin from you depending on the current market volatility. So when the markets are really volatile, it is going really wild, this RMS systems go crazy. And especially if you have, let's say, multi-leg option. I have most of my systems are on multi-leg system. I never do like buy a put or a buy a call in the direction of trade. That's what I don't do. I don't prefer to do. So when you have a multi-leg system, so your margin calculation is also fluctuating very fast. Especially now, SEBI has mentioned this ELM, like ELM margins on expiry days. So margin will change automatically, the calculations change automatically, and some reason or the other, the orders won't go through. And there is also something now called market protection. Once you have hit your market order, but you will see your trade is not executed because the bid and ask has already moved significantly from the price when you had ordered. These kind of systems, the only way to safeguard yourself from this is you have to supervise and you have to monitor the system manually every time when you are sitting. Basically automation, don't think like there's a person sitting and monitoring everything. No, you have to sit in front of the system throughout the whole market session. Yes, what you can do is instead of looking at the charts, you're eating your head by saying what is going up, what is going down. You just need to monitor your systems, what errors or what kind of system is running, whether the streaming data is actually showing up or not. Sometimes it happens is the streaming data will be extremely slow. Market is behaving correctly, everything is fine. Nifty is at say 22,900, but you can see in your system it's stuck at 22,700. See, then your risk management, internal risk management should actually say that no, something is wrong. So I have kind of a safeguard system. Like if your order is not going through, that's the reason I had built that Telegram system. And I know if my order has triggered, and but I am not getting the order filled, so I will immediately get to know that something is wrong. That's one point. Secondly, from 1st April itself, this point is very relevant now because from April 1, SEBI has mandated that you cannot hit market orders algorithmically. That is a big problem for us. I am changing the system myself to mitigate this. You have to hit limit orders only. And as you know, limit orders, it may fill, it may not fill. That's an extra, redundancy check that you need to have in your algorithmic systems to say that yes, whether the leg was actually executed, you got the margin benefit, then only you can actually enter the next set of the step. That is second risk. Third thing is system. Sometime it might happen is that it will actually just basically freeze. Nothing will happen. And if you are handling multiple accounts and your system freezes, basically you're in a really bad shape. You have to manually log into all the accounts, take the orders correctly, and maybe you have to square off those losses or square off those profits immediately. So the first and foremost important point is you cannot leave your systems unsupervised, even if you have a system. Next point is testing. I am actually basically as an IT, veteran, you can say my job is quality assurance. So this is something which was kind of beneficial for me because I know where systems can fail. I basically that's literally my job to see when a system can fail. What are the single point failure in a system? So I tend to have some over redundancies just to mitigate those situations. And again, thirdly, uh, uh, the broker may not actually just simply reject your order sometimes, even if you have margin. Sometimes there is no specific reason for this. I have raised this with a lot of the brokers, IFL, Angel, even with Zerodha. It will say that at that point of time, RMS did not find your order to have like a proper margin, so it rejected the order. And you're going to get a failure message in your system that the order was rejected. So let's say you have a four-legged system and only one of them fails, the three of them are running. So you will scratch your head and immediately you have to do something about it, right? And so far, I haven't seen any mitigation from this. You have to supervise it. That is another reason is when you have multi-leg strategies, you are actually aligning, you are ordering your orders in a way so that you can get the best spread, right? That is also something that we need to keep in mind. Let's say, for example, you are going to get into an RN corner. You cannot just nakedly sell your call and put in the first go. It is going to ask for I think around 3x or 4x the margin what you usually get if it's a protective. So you have to buy it first. So there is a proper sequence of the orders that you need to follow to get the proper margin benefits. That is also something you need to take care of. Thirdly, never trust the LTP prices. When you are actually, that is something you need to keep in mind when you are backtesting. And unfortunately, we won't have, I believe people are familiar over here with L1 and L2 data. So basically, it's a bid ask data. So when the markets are running, you will see your limit order bid, your order book. There will be a lot of 5 bids and 5 offers will be there, right? So you have, okay, told SEBI won't allow bids. Based on market price. Yes, that is what I was actually mentioning, Nikhil. So basically, going from April 1st, you actually cannot give a market order at all. Like from algo perspective, you have to always give it a limit order. So by limit order, you mean you have to give your limit, you have to give a particular price that needs to be triggered. And the problem with that is let's say you are giving a limit order at 50 rupees when the market is moving very fast. By the time you have entered 50 rupees and triggered the order, the price has moved to 100. So your order will never be executed. This is the problem and this is the risk that needs to be taken care of. And this has to be taken care of by an algo. So what will algo do? As soon as you are checking the 50 rupees, your limit order is not as per the current bid and ask, you have to check your LTP programmatically and modify your order according to the last traded price or the as per your current bid and ask. That's the only way you can do it. And that is possible only if you have a fast enough algo system. That's why it makes it relevant. So these are the problems which happens with algo, which I have personally faced myself. Yes, Nesh. So that I believe I have made this point clear enough.
Yeah, very well put. I think we are very well aware of these changes being put by SEBI, and a lot of people who have been running their own trading systems are currently struggling to figure out how do they mitigate this, because limit orders are something which essentially just put another layer of friction in terms of how automated systems have to operate.
Yes.
Right.
Yes.
So I think more or less we have covered whatever we wanted to, and we are almost towards the end of the session. I would just want everyone to just feel free now and ask any questions if they have. Maybe if somebody is there who has already been running automated systems in the past, and if you want to take certain tips from and suggestions from Sudip, because he has also been doing it for past few years. And while he is also figuring out some of the new things which are changing in the market, so maybe you can ask those relevant questions. And if you're somebody who is looking forward to get into it, if you want to possibly get inspiration, etc., maybe at that point of view and with that lens also you can ask those questions. I hope the session and the structure and the content that we had today was helpful for everyone. I'll just leave another 5 minutes for everyone to ask any questions if anyone is having.
Nilesh, question to you. In the starting of the call, you mentioned something about Tradl is planning to introduce automated trading systems. Can you talk more about that?
Sure. So our plan, Nikhil, is that a lot of people like Sudip had to, go through that process of learning all these things on their own. We feel that in future, a lot of people will find all of these things to be setting up with the help of AI a bit more easy. And what we are essentially trying to build at Tradl is something in that direction. We essentially feel that people who are serious about, improving their trading outcomes, they should have a platform where they can go. They can just not be, I would say, I would say they should not be able to feel daunted with all these systems that Sudip was saying and shown us, because some of these components were very, very natural to Sudip because he has been operating in IT, right? For example, somebody who has never been exposed to APIs, somebody who has never been exposed to the world of JSON files, for that matter, right? What are these different strings of text, right? So it becomes quite daunting for somebody to even hit the starting pedal. So with that intent, what we are essentially trying to do at Tradl is where people should be able to come, express their intent, express their desire to get into setting up a system, and the entire architecture that we will be building will be an agentic architecture in that sense, where it will allow you to build all these components without even doing it. Even if today you have to go and leverage AI, you will have to go to multiple platforms and stitch some of these pieces together. AI can help you skip some of the parts where you don't have to write the APIs, you don't have to write those lines of codes, but in terms of stitching those individual pieces together is something which is going to be a bit of a task for somebody. So that is the intent, where we want to head towards an agentic future where people should not have the friction of getting started in the direction of automation. And we feel that the entire way people trade today, a lot of the retail traders don't get into the automated trading primarily because of these two gaps, which is a skill and the infrastructure gap, which we are trying to sort of address with the help of Sudip also, because we wanted to take this opportunity to show and share how much effort does it take for somebody to get starting. For some people who belong to the industry, some people who have been doing it in the past, it feels natural. But somebody who has the right intent, the starting point itself feels very, very frictionful, right? So that is what we are trying to address. One of the key things that we will be addressing this is by sort of building our own layer of execution and not be dependent upon the external broking APIs. For example, today Sudip is doing all of that because he has created those accounts on, let's say, Angel One, Kite, etc. And then you have to stitch all of these single block of pieces, individual block of pieces together yourself. And one of the key things that we are aiming for that is maybe we can become an agentic broker in the future. That is one of the directions that we are thinking about. So all of these things which are currently looking very, very daunting, and some of the pieces that people can still pick up together on their own, is something which will become very, very natural in future, is what we are aiming for.
So it's like we describe the strategy and the agentic system does the work.
Yeah. I mean, the strategy gets coded out, all the building blocks get stitched together, and you don't have to operate it yourself. As Sudip mentioned, he has built his system, and today he acts as the supervisor. He doesn't manually look into, which particular strikes of the Nifty has to be picked. He doesn't care about, where the market is. He has laid down the rules because he understands what rules he wants to follow. He has coded it, and he has then stitched all the building blocks together so that all of these individual steps keep on happening in sequence. So the same thing will be something which will happen on Tradl as well, where you will come, you will express your thought, intent, etc. There will be a series of interactions that will happen on the platform, and then you will essentially be able to see the end outcome as the entire system being built. And you can first see it in a controlled environment where you don't deploy money, and then later on, once you get the confidence in terms of some of the simulated results, you move towards a complete deployment or a fresh deployment in the market with real money.
Got it. By series of interactions, you mean clarifications, right?
Yes, basically, the platform will not give you recommendation in terms of, hey, come and use this strategy. You will have to come with an intent. You will have to come with a certain logic. As Sudip said, his logic is something which he has already incorporated in the system, right? The system doesn't know what logic has to be created. If the system recommends you logic, then it becomes a recommendation system. And recommendation system is in itself a completely different domain altogether to play with. We are aiming to cater to those in this particular aspect of the product. We are aiming to cater to those individuals who have the intent, who have a certain idea, theme, or a particular logic on which they trade. They have been trading manually, but they want to now gradually move towards setting up a system around it. That is where we want to come into picture and facilitate the entire setting up of system through the help of agents rather than doing it manually.
And how we'll solve for that problem that say we will not allow to put orders
Uh,
algorithmically.
if I would have solved, I would have answered the question. If I haven't solved, I can't answer the question. I think the time is going to tell. We are heading in the right direction. We are heading in that particular. We are heading with that particular objective in mind, is what I can just tell right now.
Uh, Nilesh, one question. So, how do you? So, one important part is the data correctness. Like, how do you ensure, or does Tradle source the data from external vendors, or what's happening there? Because that is the super important point for executing any strategy.
Currently, we are exploring our partnerships with, Sudip also mentioned there are certain levels of data feeds that come through exchanges. So we are currently exploring partnerships with some of the L1 level data vendors where we can get direct access to some of the data that will come. But any which ways, in terms of, reaching that stage where Tradle is helping you take transactions from this platform itself is slightly far-fetched in future. We will be doing that by possibly obtaining a broking license in future. Unless until that happens, we will not be, allowing people to do transactions from our platform, and we'll constrain ourselves from just doing analysis and automating analysis or building, algos up until that point in time. To enable transaction is something that you can only do once you become a broker. So that is something that might come in future, whenever we are thinking about taking that particular direction.
Okay. One question to Sudeep, like, do you find any reliable IV data available online?
As I mentioned in Smart API, there is an option to get IV data, but as I mentioned, I trust my own system, so I just get the real-time data, calculate the IV myself. That's that's the most trusted way I would like to go.
Okay, thanks.
Okay, so I can see some of the questions. Like for limit order, as you mentioned, Nikhil. So what we are trying to do is because see, that's like kind of my bread and butter, right? So for limit orders, there's only ways you have to build a bidding algorithm. So bidding algorithm in the sense like, let's say there is a two-legged strategy. So you have to set your limit order, and there will be the same system is going to update the spreads on the other leg as and when you are modifying your limit order to match the price. That's the only way to go. I feel, and that might help you in help sorting out this issue. Any other questions? Please feel free.
Yeah, folks. Any other questions?
Nikhil had also mentioned, do you put your strategies in code? Nikhil, what do you mean like strategy in the code in the sense like, is there a framework where I just mention the strategies and the code happens? Is that what you were asking?
Yeah, and you briefly replied, yes, you put the strategies in the code.
Yes. Okay. So what I mean is that currently the infrastructure that I am following, it is customized for every strategy. Like what I'm trying to say is like, it's not a general framework where you can actually put any strategy. No, it's not like that. Because what I faced is that gives a little bit of a lag when it comes to order execution. So what I currently do is I keep my systems very lightweight. So it's a standalone, like just a one page or one file architecture. And over there, every app is like customized as per the strategy involved. So as I said that you saw that straddle strategy, right? So that app or that particular script is dedicated entirely to help the straddle execution. So let's say if I have a different execution for the calendar or maybe some iron condor, the app will be specifically customized in a manner to help that particular strategy. That's how it is built.
Yeah, makes sense.
Okay. I'm asking something which might be a little bit weird, but any given point of time, how many strategies should be running, or are you running, if at all you wish to answer that question? The reason I tell you why I'm asking it, obvious after a point of time, people will also understand why I am asking, because some strategies work and some strategies don't work. So this is something which is going to be a part of experience. So what I'm trying to ask is correlation and non-correlated things, if at all you wish to answer.
Okay, yeah, sure, why not? So see, as algorithmic traders, I actually personally follow up like a principle. In the market, I am mainly a volatility trader. Okay, I have like every trader in this in the market have their own approach. So I try to categorize myself as a wholly a volatility trader. So what I mean by this is, in the market there can be four volatility regimes. Volatility is high, volatility is low, volatility is rising, or volatility is decreasing. So basically what I tend to follow is I do have multiple strategies and they're all deployed simultaneously, because you don't know when the market is going to change at what point of time. And I try to allocate capital divided in the 4 or 5 of my strategies depending on the volatility regime. So let's say, for example, the straddle, it works very well when the volatility is high, because the premiums are very juicy. You can actually get good amount of money. If you know, like for the last 1 to 1.5 years, VIX has been very low. At a point, even at a point of time, it reached below 10, I think 10 or something like that. So at that point of time, the straddle strategy won't work very nicely. You will just break even maybe over a period of 6 months. So, but at the same time, some other strategy will perform better. Like if you have a diagonal or if you have a iron condor, whatever. I'm just giving as random examples. So it is going to give you strategies. The best way to go forward for a system trader is, think of it like you are diversifying your capital across different type of market regimes, so that some or the other strategy is going to give you money. Some may have little bit of losses, but the profit generated by the other strategy is going to overcome those losses and you are going to be net profitable. That's the way I approach the markets.
Fantastic. Thank you so much. And one more question. It might be a little bit again the same thing.
No worries.
Testing or front testing?
Sorry, testing?
Testing. So basically, back testing is what majority of the people are aware about.
Right.
Front testing is something which I would personally say people are not aware about or might not be interested in doing, because that's a time-taken process. And the reason why I wanted to check with you how many strategies. The reason I tell you frankly that I'm a full-time trader, I have got 4 different strategies running simultaneously, and aware that all are not gonna give me money at same point of time. So net on net
Right.
basis, month end, we are profitable. Month on month basis.
Right.
I won't say day on day basis, but month on month basis. Same thing, because some works, some don't work. The only thing I would say
Okay.
thanks to you is I was aware, like what we were doing is for two different volatilities, what was we doing? You introduced
Hmm.
me, or rather, I was ignoring the other two volatility. So I'll be checking out with the other two as well. Thank you so much.
Okay. No worries, no worries. Yes, and to answer your question, so back testing versus forward testing, right? Back testing is a very good. Okay, let me give you a journey. Like if somebody is aspiring to be algorithmic trader or system trader, the first point obviously is the back testing. Yes, you have to start with back testing, but there are some problems or like pitfalls that a person needs to know. When you are back testing, you are going to only get LTP data. And let's say your strategy depends on some of the contracts which are not very liquid. So the real time problem or that I have actually seen is the LTP will, let's say, be at 100, but you will see the bid ask for that particular contract is around, let's say, 70 or 80 rupees. Like the bid is 70 or offer is 80, but the LTP is showing 100. What happens is when you are going to backtest is the system, all the systems, they do not keep a track of the current bid and ask. They only track only the LTP. Whatever data or whatever historical data I have received from broker APIs, you will only get LTP. So in backtest, it might be possible that you are getting a result which is way better than it would have actually operated if that was in live market. So coming to Nikhil's point, the next obvious step is to forward test. I never deploy any live system in the market unless I have tested it, like forward tested it at least 1 month. And at least around 22 or 30 trading sessions, I see how my system is behaving in a real simulated environment. Now, what do I mean by real simulated environment? So as I showed you, I was running my algos with the test flag, right? If I'm running in the test flag, it is going to simulate as per the real market values. It doesn't take the LTP. You have to always take care of the best bid or best ask, or even I would say if it is moving too fast, you have to take L2 data. L2 data means like an order which is standing, let's say, at the third or the fourth place of the L2 limit order book. Then only you can actually try to simulate the actual behavior or the actual result you would have expected if that strategy was like. So backtesting, you have a hypothesis. You backtest it to see whether your hypothesis is standing correct for a long period of time, typically at least minimum 3 to 5 years. If you are seeing wonderful results in backtest, you have a lot of backtesting parameters. Obviously, I'm sure like AI is there to help you out in that. Like you can have a Sortino ratio, Karma ratio, etc., etc. Once you're satisfied that your strategy is profitable, it is going to give you like good expectancy over a period of time. Then you build the strategy. Then you have to forward test it. Please do not, you feel the back testing is fine, you are profitable, immediately deploy it in live market. Do not do that. You are going to just end up losing money. May or may not be. You might get profit, but the point is that is risky. Run it for 1 month to see whether your system is breaking under different scenarios, especially in a time like this where market is changing on the whims of one tweet or one, truth social comment. So that's a very problematic scenario. Okay, how to get started on algo trading as a beginner? Can you say? Okay, resources. At the point when I started, there was very few YouTube videos, only mainly by Zerodha itself. They would post their own videos like how to actually connect to their APIs. Now, thankfully, there are a lot of LLMs you can get help. I can give you an example. If you have the GitHub repository link, you can directly go to Claude or ChatGPT, give the link over there and say, build me a trading framework based on these APIs. Yes, but that doesn't mean it is going to give you a totally end-to-end scenario. You have to know coding, unfortunately. I mean, that is what Nilesh and his team is actually trying to achieve. That will really help me. It will reduce my turnaround time for trading the strategies. That is going to really help. But unfortunately, till that date, first of all, you have to figure out which brokers are giving you APIs for free. Then you have to build the whole system on your own. AI can help you, but you have to build and test on your own. Do not depend on anybody else for testing. Testing, you have to do it yourself and see whether my system is behaving how my system is behaving under weird market scenarios. When market is dropping, let's say 3 to 4%, and the market is under extreme tension, how will your system respond to that? So you have to think in that manner. Then you have to go to YouTube. YouTube, there are a lot of videos currently for this. I think there is a course. Somebody was selling a course in Udemy also, how to build a broker-based ADA system. So you can go over there. And if not, please feel free to connect with me. I can definitely collaborate on that. Any other questions? Please feel free.
Thank you, Sudip. I think we have covered most of the questions. We have also passed the time. I hope everyone enjoyed today's session. This was also one of the first sessions being taken by somebody who is one of our early users as well as a community member. So we'll keep doing this more often in future. Thank you so much, Sudip. It was very, very insightful, and thank you for all the efforts to share your knowledge with everyone. I hope the session was aimed towards inspiring a lot of people who are amongst us right now to take the next steps towards automating their systems and graduate from being an operator to a supervisor, I would say, is the learning lesson from today's session. How to reach there is something that we will make it easier for everyone at Tradl, and that's what we will keep coming up with. Whenever new things are going to get live on the platform, we'll keep coming up and sharing with everyone. Thank you so much for joining us on a Sunday. We really enjoyed hosting everyone. For all the participants who joined as well as who had registered, we will share the recording, and we'll also pass on link to Sudip's LinkedIn. So if anyone of you wants to get in direct touch with Sudip and wants to pick his brains on whatever you are trying to do and collaborate with him in any capacity, you can feel free to do that. He's also a part of our WhatsApp community. So if you happen to be on our Early Believers WhatsApp group, we keep tagging him on all the messages here and now, so you can get his contact number also from there. I hope he won't feel bothered about it much, but if somebody bothers you, Sudip, please let me know. All right, thank you so much. Thank you so much, everyone. Have a happy Sunday. Looking forward to have an amazing week. It's going to be a crazy week following whatever has been the development so far. So let's see how the April month unfolds amongst everyone. But yeah, all the best to everyone, and looking